Okay, let's begin by just reviewing some of the details I've already mentioned about the final exam. Our final exam is a week from today, Friday the 10th, and you'll be just about finished by now, a week from today, because we start the test at 10:15 a.m. and we've got a 2-hour limit for that. There are going to be concept questions and problem solving. And the point distribution is going to be roughly 1/3 of the points available on concept questions, maybe a little bit more, and then the remainder on problem solving. And on the concept questions, you won't be able to access any resources besides just your memory and a pencil. And so the computer will be closed. The formula sheets that I provide will be set aside. You won't be using the 1 page of notes that you prepare. You're going to be answering the concept questions just from your memory and understanding. But then on the problem solving, there will be questions where you're going to need to use Excel. I'll have the equation pack that I've given you before, like the sheet and any factor tables. If there happens to be a problem that is related to the depreciation, then I'd give you the depreciation table, so you don't need to translate that onto your own sheet of notes. But what you ought to maybe consider doing on that page of notes that you can prepare is any kind of problem type where you're solving it with a spreadsheet and you'd need a reminder on what the column titles should be, or if you want to provide yourself with an outline of what steps to follow, then that's a great thing to put on that 1 page of notes, because when you're using the Excel, you need to start from a blank workbook. You can't open up a previously created homework assignment or in-class exercise. You're just starting from scratch. Any questions about the final exam? Yeah. It's comprehensive, so it's going to be everything in the semester so far. And so as long as I'm giving out advice about the final exam, my suggestion then would be to get this course schedule that I provided at the beginning of the semester. If you don't have the paper copy still, it's posted on MU Online. And it shows all of the book chapters that went with each lecture. It shows the lecture topic. And then it also has the class numbers. And so if you happen to miss a certain day, or you just were under the weather and maybe your mind wasn't as clear as you would have liked that day, what you can do is you can search for that class number in YouTube and find the lecture. So if you knew that maybe you were on some sort of a trip on March 6th, then you just search in YouTube Engineering 222 Class 22, and then it would pull up the lecture related to incremental rate of return. If you have any questions about the concepts and so on as you're studying, I'd be glad to meet with you next week. I'm going to be in the office as much as possible, and there's a couple of faculty meetings scheduled, but I will be available if you've got questions, and so just please let me know how I can help. Other questions about the exam? Yeah.
How many questions are there going to be?
I haven't written it yet. Yeah, I'm not sure. But my standard procedure is to try and make the questions a little bit shorter and have more in number. And then what that allows me to do on the final is make sure that I ask a broader range of topics. Like I wouldn't want to ask like just 2 or 3 really detailed, lengthy questions that are narrow in focus. And like I'm only covering, of the 44 lectures, I wouldn't want to ask questions on only 3 topics. And so I don't know exactly how many questions it's going to be, but and that's the general approach that I take. A study guide. Not anything separate from what I've already given you. I don't have anything prepared that's kind of like distilling the course down to even more of the essence other than the notes. And so I wish that I did, but I don't have any other study resources besides the suggestion that the textbook is excellent, the videos are posted online. I'm giving you the equation formula, so if you wanted to familiarize yourself with what's on there and where, and then of course the PDF files of the notes, all that's available, but I don't have a separate formula sheet. Excuse me, a separate study guide. All right, so last time we talked about excise taxes and sales tax and property tax, and today we're going to continue talking about taxes with income taxes. But before we do, let's do just a few more of these concept comprehension questions just to start you thinking about preparing for the test that you're going to have a week from today. This goes way back. So draw the cash flow diagram, including labels and symbols for this statement. Translate the statement into a cash flow diagram. By the way, I noticed that the markers that okay, so horizontal line starting at 0, and we're going to be doing it over a period of 6 years. So 1, 2, 3, 4, 5, 6. And it says that today we receive a loan of $5,000. And so that's money coming to us today. The present, the line is up above the horizontal axis. P equals 5,000. So what we are told is that we're going to repay the loan in 6 equal payments of $969.39. So 1, 2, 3, 4, 5, 6. And this is an annual series, and so the label we should apply, A equals 696.39. No, 969. 969 and 39 cents. And then we also, just somewhere in the proximity of the cash flow diagram where we've got some white space, we can define the interest rate. I equals 4.5%. All right. Just glancing around, it seems like everybody remembers how to draw a cash flow diagram. It's hard to imagine that that was a tough, unusual concept when we started this semester. Like the idea of translating the statement to the cash flow diagram was something that you had to learn, but we've come a long way over the course of the semester. Another one of my moves that I like to do is give you a picture and ask me to explain it. And so in detail, like what's the story of the thing that's being summarized. So first of all, let me guide you towards the story that I think would be a good one to tell about this. What do the widths of each of these columns represent? Anybody remember? The width of the columns? Yeah? Very good. Yeah, so it's how much each project costs. And why is it that A is the highest, B is the next highest? Is that coincidental that they've been arranged in such a way that the highest is first? Why is it that they're arranged that way? Yeah, but why? Why have we rated it that way? Like, think in terms of a company. Like, what is it suggesting? Exactly right. It's suggesting a priority. And so the suggestion is your first priority, the project you definitely want to fund, is project A. Why is that our first priority to fund that project? The most profit. Exactly right. Yeah. Project A is yielding 35%. Now, before we go too much further, let's talk about the blue line. Who can tell me about the blue line? It's not risk directly, although it's influenced by risk. What does it represent? The weighted average cost of capital. And so it's kind of like how much the lender that is going to be financing these projects, how much they want to be paid in order to provide that much money. So the question is, why is it going up? And now, it's because risk. Yeah, so what's the risk? Describe that in more detail. Elaborate. But tell me, why is it more risky for the bank? Why is it more risky for the bank if I borrow $7 million than if I borrow $3 million? Pardon me? less of a chance I'll pay it back. Why? Why is it more probable that I'm going to default on a $7 million loan than on a $3 million loan? Because there's bigger payments. What else?
So because the money's out for longer, you're borrowing money for a longer time.
That may or may not be true. And the reason why I say that is if you borrow the $7 million, it's not that you still have the same amount of income and you're paying it back at the same rate as if you'd borrowed $3 million. The idea is you're borrowing $7 million so you can do more projects and get more income. But the risk is that these other projects on the margin, they're not as profitable as the earlier projects. And so it's more and more risky that maybe your estimates about what they're going to yield were too optimistic, or there's more risk that maybe one of your clients decides to go with another firm, and then all of a sudden your order book is short, and you're not going to have the same revenue that you were expecting. Or there could be the risk that some of your customers just go out of business. And so the line is going up because the more you borrow, the greater the risk of your default. And the bank wants to be compensated for that risk. If they are going to be incurring a greater risk, then they want a greater return. And so then what's the main thing that this figure allows us to do for decision making? Okay? It illustrates whether a certain alternative is acceptable or non-acceptable. And so I've used the phrase quite a lot this semester, decision criteria. How would you use the phrase decision criteria in describing what's going on with this image? Okay, very good. Yeah, the decision criteria is that the rate of return of the project should be greater than the MAR. And so what we can say specifically is projects A through E are acceptable because their rates of return, their anticipated rates of return, are greater than the minimum, which is going to be set by the cost of capital. And so, you know, the cost of borrowing money is generally the bare minimum that your MAR would be. And sometimes the MAR is even above that. It says here that our company's MAR is 16%. And so they want to be able to pay off the bank and then also keep some of the profit as well. So our terminal borrowing costs, it looks like they maybe are, in the end, approaching 16%. And that's largely because you wouldn't want to borrow money and then just turn over all of the profits to the bank for doing a project. So just be prepared to go a little bit deeper when you explain concepts. Don't just say like a one-word response, you know. Explain maybe the next step beyond your first idea and maybe a little bit more. You know, like just really, the whole point of these questions is to demonstrate that you understand the important concepts of the course. So just tell me some stuff to convince me that. Do you have a question? Yeah.
General question. That graph doesn't exactly show like what's going to make the most money, right? Because couldn't C make more than A? Because C, like it's a lower percentage, but you pay more money, so you'll actually get more profit out of C than you would A.
He raises an important point. This figure is not from mutually exclusive alternatives, because in this figure, these are options that we can select everything, all of the options, where you still have enough money to do it. Now, the point that he raises is that project A doesn't necessarily yield the most profit. So if we were going to be, if we had mutually exclusive, so we can only pick one, we would want to maximize revenue. We wouldn't want to maximize the difference between 35 and 10. We'd want to maximize the area under the curve. And so option C is probably the biggest area under the curve of all the projects, if it was mutually exclusive. And so what we would do there is we do present worth analysis to identify which option is best, or incremental rate of return analysis. You know, if it was like a face-off of all the options and we wanted to find out which one is going to be victorious, we would have to find some way to look and see, is the incremental cost of one project versus another justified? Great point. Other questions or comments about that? All right, this review, Wednesday and Friday, this was not a comprehensive review. This was just to kind of, it was an appetizer for all the studying you should be doing, but don't pull all-nighters. Those are really detrimental. I'm going to put a question on the exam that says, did you study all night? And if you say no, you'll get extra points. All right? That's how much I don't want you to pull an all-nighter before the exam. It's unhealthy behavior. Did I tell you already I've been reading a book about sleep? Yeah. All right. Income tax. Income tax didn't used to exist in the United States. It's only been around for, I don't know, about 150 years. It was instituted to help pay for the Civil War, and the first income tax, they snuck it in, making it low enough that people kind of didn't care. It was only 3%, and it only applied on income over 800, and that was a lot of money back in 1861, and so the income tax really wasn't much of an issue in those early years. It was later reduced to just 2% to the income over $4,000. And when it was reduced, $4,000 was equivalent to about $113,000. And so people who were making, the average American wasn't effectively even paying any income tax in those early years. This figure kind of shows the different ways that income tax is collected across the world. The United States, you can see, is a little bit different from most of the rest of the world in that if you live in if you're from the U.S., you have to pay U.S. income tax even when you're outside of the country. There are a few countries where there's no income tax that's collected at all, most notably in the Gulf area, a few countries in Africa. I used to live in the United Arab Emirates, which is here, and I didn't pay income tax to the UAE when I was there, but I still had to pay income tax to the United States, which was a little annoying. Less. They give you a bit of a deduction when you have foreign earned income, but you still do have to pay taxes. So what we're going to do today is get a taste of the new and improved 1040. Just in 2018, the last year, people just filed their taxes in April for 2018, but it's kind of a new thing where they've tried to simplify the filing process that you follow. The form that I used to use and that I was going to, in previous semesters, have you work through was the 1040A. And the 1040A is what most people who had a house and a job and a few investments, most people would use the 1040A. And then the 1040 was limited really to people who had maybe a business of their own or who had particularly complicated investments. But they tried to simplify things a little bit, and so we're going to go through that. And I know some of you have used TurboTax before, but part of the reason for this is to show you that you can actually just do it on your own without paying someone at Jackson Hewitt or H&R Block or even paying for the software. It's not so complicated that people can't do their own taxes. And so I want to kind of demystify the process and then also show you that actually income taxes are pretty low in this country. We don't pay too much when you look at the effective rate after all of the deductions and so on. Okay, so what I'd like you to do is copy down these details onto the bottom of the 1040 that I've just given you. So what I've just handed you has on one side the first part of the 1040 and on the back has the second part. So copy down this data on the applicable details on the bottom of the page, and we're going to go through and find out how much this family owes in income tax. You know, there's the joke about people who wait to the last minute to file their taxes. I felt like I was experiencing that this morning as I was running through and checking my calculations for class because I had to redo the in-class exercise because it's a new form and everything. So I was rushing through my taxes before the deadline. The incentive for filing your taxes is usually that a lot of people get a refund, you know, and so that's always kind of a nice bonus in March or April. You'll get this big slug of, it's your own money, but you're getting it back, and that's pretty fun. All right, does everybody have this written down so far? Let me give you just another minute, and then we'll go through the forms together. All right, I need to get the fillable form from the IRS so that I can be typing all this stuff on the screen as we go through together. IRS fillable form 1040 2018. All right, so let's go through this. Just to summarize again, these guys made a pretty good salary, this family together. $80,000 from their normal jobs and another $10,000 by working in the evening for Uber. And then they also had some bank account interest and dividends. We're going to go through all this and find out how much they have to pay in taxes. And so just some preliminaries here. The filing status is going to be married filing jointly, and that actually has some implications in terms of how much your deductions are and the tax rate that you have to pay. The government kind of subsidizes the institution of marriage by virtue of taxing people less if they are married filing jointly. So we'll take it. We'll just fill out some fake name here, John A. Doe, and some fake social security number. That's your social security number? Oh boy. All right, we'll give Jane B. Doe and another social security number. Now, whose is this? All right. Now, there's some deductions if you're blind or if you're old. Now, this, though, is important. Someone can claim your spouse as a dependent. Someone can claim you as a dependent. Maybe you're still in the position where your parents are providing more than half of your support. And if that's the case, then they can claim you as a dependent on their tax return. And then they get to save a little bit of money on their taxes. But if they claim you, you can't claim yourself, and you can't get the deduction on your taxes. And so that's why it's asking about whether someone else can claim you as a dependent. We also have to indicate that we had health care in coverage. Otherwise, there's a penalty tax that has to be paid. So yes, we had health care coverage. Now, this is kind of an interesting thing, this presidential election campaign. You're not allowed to pick where your tax money goes in general. Like, if you're a big fan of the Department of Agriculture, like I am, I can't say that I want all of my tax money to go to USDA. The government decides where to spend it. Or if you really hate the Coast Guard and you don't want a penny going to those guys, you don't get the choice to choose where it's going, except for here. What you can do, and it's not going to increase your taxes, but you can say that I want $3 of my taxes to go into a special pool of money that can be used by presidential campaigns so that then they don't have to sell their soul to corporations. Unfortunately, for the last many election cycles, presidential campaigns haven't used that pool of money. Instead, they've decided to rely on corporate donations for the most part in the general election. But if you want, you can choose where $3 of your money is going to go. So we'll put on a fake address here, 123 Fake Street, and Huntington, West Virginia, 25755. All right. Now, they ask about your dependents because this is the one time of year that having kids pays off as the tax credit. So we're going to put in some dependents here. Let's say, for instance, that maybe we've got 3 dependents. We've got Hayden, We've got, same last name, Doe, Aiden Doe. We've got Kaylee Doe, and we've got Dakota Doe. And some more fake Social Security numbers. I guess we don't really need to fill that out. Imagine that there's a fake Social Security number in there, and you have to, in the relationship it asks because they don't want you claiming like neighbors or like nephews unless they really genuinely are your dependents. And so if you're going through TurboTax, it asks some questions to screen out, for instance, if it's a kid that only lives with you in the summer, then they're not a full year dependent for you. You know, you have to be providing more than half of their support more than half of the time. So then you'd put like son, daughter, son. And then there is in the instructions for the 1040, a list of criteria of whether you're allowed to take them as qualifying for the tax credit. And generally it's, for instance, if they are under 18 or under 25 and still in college, and you have to provide more than half the support. So let's say that in all three cases, we're going to take the child tax credit, and I think that's $2,000 per kid. $2,000 per kid, right, for the tax credit? 15,000? No, I think it's 2,000. Oh, you must be in a higher tax bracket than me. Yeah. I was allowed to get 2,000 per kid, but I spent a lot more than 2,000, so I didn't end up coming out ahead. Maybe eventually, when I put them to work when they turn 14, it's full-time work, right? All right, so now on the second page, this was just the preliminaries. The second page, you add up the wages, salary, tips. In our illustration, the $40,000 is the sum of our and our spouse's income. And you'd get that information off of the form that your employer sends you at the end of the year. Is that called a W-2 form? Yeah, the W-2 form. So for our person, that is $80,000 was the amount of the wages. Okay. Taxable interest, the interest that came from the bank accounts that we have, $3,000. Dividends, you'll notice that it distinguishes between qualified dividends and ordinary dividends. And also the same thing with interest. There are certain types of investments that are exempt from federal taxes. So if you buy bonds from the U.S. government, for example, like Treasury bonds, they don't charge you tax on the interest that you make on those bonds. And so that's a consideration. But let's just say that the bonds that this person owns, the bond dividends they're getting, maybe it's in a company that doesn't have any special status, and so those are going to be subject to taxes. And so we will enter the $1,500 for the ordinary dividends. All right. This person isn't yet in retirement, and so they wouldn't be taking any money out of IRAs or pensions or annuities, and likewise doesn't have any Social Security benefits. And so there wouldn't be anything in lines 4 or 5. And then 6 is the total income. And you'll notice here this box off to the side. And this says add any amount from Schedule 1. And actually we do have to add money. I won't flip over to Schedule 1 because we're running low on time, but that's where you declare the money that you made through self-employment or as like an independent contractor. And Uber is going to be paying you as an independent contractor. And so we've got $10,000 in this self-employment income that we have to include. And so then the total, line 6, is going to be $94,500 because we had $84,500 above and the $10,000 from Uber. All right. Now the adjusted gross income is going to be less than that. And again, we would have to go over to Schedule 1. And there's something called self-employment tax. When you earn $10,000 from Uber, you have to pay like the Medicare, Social Security, FICA, you know, those tax payments that ordinarily get taken out of your paycheck. What you're supposed to do is, if you're self-employed, if you have your own business or you're working as an independent contractor, you're supposed to figure out all those amounts and send it to the government once every 3 months. So quarterly payments. And there are forms on the IRS website that can help you figure out how much that is. But I like this calculator because it kind of takes the guesswork out of it. It asks you, what was the amount that you earned in your self-employment income? So the $10,000 we got from Uber, and then it asks, what was the other income you had besides that? Because you get charged at a different rate the more you're earning. And so our other amount, our normal wages, was $80,000. And so you click on calculate, and then it says that your self-employment tax is $14.13, and then the taxable you only have to, you get a deduction for that amount that's paid. And so all that explanation is just to tell you that we have $94,500 here. That is the total income, but the adjusted gross income, the AGI, is going to be $94,500 minus the self-employment tax divided by 2. And the self-employment tax was $11.45. No. $14.13. So $14.13 divided by 2, because they only make you count half of the amount that you already paid tax on. It's confusing, but anyways, our AGI is going to be $93,793. Okay? And all of these things about 1/2 of the self-employment tax, that's in the instructions. It's not like I had to go to a special course to learn any of that. It's just all available online. $93,793. All right. Next, in line 8, is the standard deduction. Now, if you have a big mortgage, or if you're donating a lot of money to charity, sometimes you can itemize all of your donations, but if they don't add up to more than $24,000, then you're better off just taking this standard deduction. And so let's assume that that's the case here, that this $24,000, that's how much money you're allowed to make without having to pay any tax at all. They call it a standard deduction because that's how much you can deduct from your income without having to pay taxes on top of it. So our standard deduction is $24,000. Qualified business income deduction, we're not taking any deductions for our business. Qualified deductions, there's a specific, this word qualified has a technical definition about if you have a business that's related to the knowledge economy and you have certain expenses related to that business, then you can deduct those costs, but we don't. So our taxable income is going to be $93,000 minus $793. So that is $69,793. That's our taxable income. Now the way to find out how much tax you have to pay on that amount is there are these tax tables. You know, there's an equation, or you can flip around in the book that the IRS has and go to the tax table. And you'll notice that there's different columns if you're single versus if it's married filing jointly, married filing separately, and so on. So we are married filing jointly, and our taxable income was $69,793. So we find that row, $69,750 to $69,800. So this is our row, and that means that our tax for married filing jointly is $79.92. $79.92 is the tax. And we'll just move that over here to line 11. $79.92. We don't have a Schedule 2, so we're not going to add any separate amount. Now, the child tax credit, since we had 3 kids and it's $2,000 a kid, then it's $6,000 is the child tax credit. So we'll put that here, $6,000. And then in line 13 it says subtract line 12 from 11. So here's 11, here's 12. We're going to subtract 6,000 from 79.92, and it's 1992. Other taxes, Schedule 4, we don't have other taxes. And in the instructions, it would tell you what kind of things apply for Schedule 2, Schedule 4. So it'll be obvious that you can skip over it. Now here in line 15, total tax. And so our tax is $19.92. If we didn't have kids, our tax would have been $79.92. But the kids brings the tax down. And now it's asking in line 16, how much tax did you already have withheld? And that was one of the points of information that was in this given data here, that in our salary over the course of the year, our employer withheld $3,100 in federal taxes, and our spouses had $2,500. And so the total amount of withholding that we had was $5,600. So we'll put that here into federal income tax withheld. That's the amount we've already paid. And fortunately, the amount we paid already is more than we've got due. There's some stuff over here to the side having to do with the earned income credit. You know, people who have a low income are able to get special credits from the government. In our case, I think that the pay is probably higher than we'd qualify for the earned income credit. So our total payments are $5,600. That's how much we paid before tax day over the course of the year. Now, we have to do the math and figure out how much we overpaid. If we owe $19.92, and we already paid $5,600, then we overpaid $3,608. Now, line 20 is, I think, the funniest line in all of federal tax code, which is saying a lot because it's just hilarious. But they're asking how much of line 19 you want refunded to you. I mean, like, as opposed to what? You know, like refunded to somebody else, or you just tell them, I'll keep it, you know? So obviously you want all of it. I guess in theory the reason why they're asking is that you could carry it over to next tax year. You know, if you thought, well, I'm going to be making more this year, I'll just get a head start on paying my 2019 taxes. And so they'll keep it and they'll credit it towards this year's amount. But no, it's more fun to get that fat refund and then go to the beach. So what we're going to do is we're going to say we want it refunded to us, and you put in your bank account routing number, and you tell it if it's a checking or a savings. And these days, you're getting the money pretty quickly. Like, I filed my tax return, and within 7 or 8 minutes, it was accepted by the government. And within, I think, 6 or 7 days, I had the money in my account. One of the things you have to know in order to file electronically is you have to know what was your AGI last year. And they're doing that as a security measure because, you know, people are filing tax returns for someone else, having the money deposited into a checking account, and then like transferring it to the Cayman Islands or something like that. So it's like an identity protection thing. So this number AGI, you sometimes hear it quite a lot. And if you're filing electronically, then where did we have our AGI? Right here. You'd need to know that number from last year to be able to file this year's taxes. Anyways, well, am I going to have you fill out a 1040 on the final exam? Probably not. But there may be some concept questions related to income taxes on the final exam. So that is the semester. We're done. I've really enjoyed it. I hope to see all of you again. Even if you're not a civil engineer, you can still take fluid mechanics from me. If you're an electrical engineer, come try hydrology. I'd love to see you. So exam next Friday. and let me know if you've got any questions till then. Have a good day.